Hello, fellow traders. Tis I, the rumpled one. This is take two. I think I messed up something. Anyway, today is Thursday, April the 11th, the year 2019. Let's talk trading. Horizontal lines, rat zone. Okay, I'm going to first, let me just show you the money and risk management screen. I have to do that. I would be remiss if I didn't. Now, I need to switch over to show you something. This is out of the book How We Decide, and let me just read this to you quickly. Look, for example, at this elegant little experiment. A rat was put in a T-shaped maze with a few morsels of food placed on either the far right or left side of the enclosure. The placement of the food is randomly determined, but the dice is rigged. Over the long run, the food was placed on the left 60% of the time. How did the rat respond? It quickly realized that the left side was more rewarding. As a result, it always went to the left, which resulted in a 60% success rate. The rat didn't strive for perfection. It didn't search for a unified theory of the T-shaped maze or try to decipher the disorder. Instead, it accepted the inherent uncertainty of the reward and learned to settle for the best possible alternative. The experiment was then repeated with Yale undergraduates. Unlike the rat, their swollen brains stubbornly searched for the elusive pattern that determined the placement of the reward. They made predictions and then tried to learn from their prediction errors. The problem was that there was nothing to predict. The randomness was real. Because the students refused to settle for a 60% success rate, they ended up with a 52% success rate. Although most of the students were convinced they were making progress towards identifying the underlying algorithm, they were actually being outsmarted by a rat. Now, what's that got to do with trading? Well, it has a lot to do with trading. Market's random. I mean, you do not know or can predict with 100% certainty the outcome of the next tick. Will it be up? Will it be the same? Will it be down? You cannot predict that. Therefore, the market is random. But statistically, we know certain things happen on a regular recurring basis, and that's what we take advantage of. We know we're not going to win each and every trade, and that's why we have money and risk management. We know we're going to lose a certain number of trades, and we are willing to lose a certain amount per each trade. That's why we employ this money and risk management, because it gives us the confidence knowing that if the trade we just entered is going to be a loser, we already know what we're going to lose. But we don't know how much we're going to win, and we don't know if we're going to win. So we can control how much we lose on each and every trade. We control that by placing a stop loss a certain distance away and by only having a position size coupled with the stop loss will only risk the amount we're willing to lose per trade. So let's get into it here. First, we'll look at the week. Gaps filled. The euro yen has cut across the weekly or the previous week's upper wick zone. Okay, you see that? Even crossed below the middle, came back up. For those of you who like trading the midpoint, I might have to do a whole week on midpoint. Okay, here we go here. We've got the euro yen making new highs. So we're going to look for a red rat reversal, range 62.8 pips at the moment and still climbing. Now, you see here we cut above previous day's high, 20 pips above. Once again, the range being 63. But as you can see here, we're still anemic, only 3 pairs over 100. And you can see ticks just moving slightly up. We had about a 5 pip movement here. Now, I want to bring up a chart here on the rat zone. Getting back to the rat. Now remember, the rat zone, let me go back to the main. It's 20 pips above the daily low, current daily low, and it's 20 pips below the current daily high. And as you can see here, Larry live trade, you can see the dots are moving up as the price moved up, making new highs. So the idea is either you want to be a red rat and always trade short, or a green rat, always trade long, because you don't want to wind up being a Yale student. So, and why would you do that? You say, but no, if I'm a green rat, but I see it's in the red rat territory, it could go the other way. But you see, if you try to rat reversal, or if you had tried to reverse somewhere here, you see it went against you. But had you entered the trade here and stuck with it, you'd be making more pips. So sometimes you're going to get a little, sometimes you're going to get a lot. That's why you want to be a green rat or a red rat, but not both. Because if you try to be both, you're not a rat anymore, you're a Yale student. And I hope that's crystal clear, because you can see here, based on this histogram that shows the size of the wick, how many times it hits 20, or how many times it hits 10, how many times it hits 50. So, I mean, if you were a green rat here, you see what would have happened. You would have made a nice, a very nice profit. Now, right here, if you were a red rat, there was no real opportunity here, because price just kept moving up. So, of course, this is looking at it end of the day. So, for example, it might have made a high, came down, you maybe made a handful of pips, and it turned around and went back up on you. But once again, that's just trading. You can't predict. But having this histogram, this is just for analysis. When you're trading, you don't need to have this on the screen. This is totally for end of the day, or when the market's closed on Saturday type of analysis. Or you could do it during a time when you don't normally trade, like maybe during the Asian session, or late at night when, once again, probably during the Asian session, or when there's just not that much movement and you just don't trade then. So, and in case you're wondering, that's let's see, that's way back 10 years ago, 2009. But you don't really need this. It's just another visual, but it helps to explain and maybe give you the confidence on this rat trade. And so you can see here, anytime price closes below that red dot or above the green dot, those are your pips that you would have made had you entered within the rat zone. And so let me know if you understand that or not, because I think once again, this visual is just a helper, but if it sinks in, then you go, now I see. And this is definite. The rat is a reversal trade. Okay, so the main thing is entering within the rat zone. You can use a rat reversal turn trade. You can use a coin flip. It really doesn't matter, because chances are, if you enter in this zone, price is going to come and close between the two zones. And so that means if you enter long here, enter short there, there's a good opportunity that you might pick up a couple of pips. And I just say couple because sometimes, once again, you could get a little and sometimes you could get a lot. Okay, here you can see on the daily, previous days, upper wick zone, price shot above it. Only 63 pip range. 1, 2, 3, 4 pairs, 100 or better. Another anemic trading day as far as range goes. You can see here, We've had some upward movement. Now we've had some downward movement, and then we go back up again. This is at the tick level. The Einstein line gave us a trigger. You see here, you could have probably taken about 4, 5, 6 pips, and a lot of people would sniff at that and laugh. But once again, you don't know what's going to happen next, so you take what you can when you can. Here, just showing where price is across all the rat zones. And here you can see we hit the ATR range now, or we hit the ATR zone, which over the past 14 days, the ATR2 was the biggest, ATR6 was the smallest, between 2 and 14. So it's really, 13 days, 14 days. We found out we make a zone, and when price enters that zone, we look to reverse. Now, that's not a trading method. That's more of an indicator saying, okay, price is in an area where it's really likely to reverse based on the ATR being hit. You can see here it shot right through the ATR 2 plus 50 and ATR 6 plus 50 up into the ATR zone. It's still climbing. Now, this being said, if you enter a trade here, then price could shoot right through that ATR zone. So don't don't think if you enter here it's automatically going to reverse. It's not. And once again, bottom minus the low and the high minus the top, giving us the frequency distributions of the rat and the chances of you making those pips. So once again, I like to put the rat zone at the 20. You could put it at the 10, but you do run the risk, if you put it at 10, of having that rat, come back a couple pips and then snap and really run against you like it's doing right now. So that's why I like to wait to see a red candle close before I start going short, or have a green candle close before I start going long. It's only 15-minute candles. You can use 5 if you want. And in fact, those people who really have a hard time with the rat, I say use the H4 candle. Okay? And in this case, it dipped back in and came back out. Or if you're not really struggling, then you can use the H1 candle. And you can see here, there's plenty of opportunity. I mean, plenty of opportunity to get in using H1 candles. But, if you start out, you're going to have to wait up to an hour for that candle to close to see what price does. And a lot of people just don't wait. And so what happens is they get burned sometimes. Now you can see here how the zone moved, and some people say, oh, that indicator repaints. It's like, well, it only repaints in the sense that once it knows what the high is, it just paints it all the way across. But as you saw before in Larry Live Trade, you see these dots pushing. So if they want to call it repainting, I don't really care, because it works live when I need it. It's just really that simple. But, I did write a version that has the dots moving up, and then when you rerun the indicator, bring it up again, it will keep those dots where they were. But I like this version better. And I don't have to worry about what somebody else says, and neither do you. Okay, we saw those zones. We saw that. Once again, the frequency distribution of the range, it's going to be 30 or more most of the time, almost all of the time, because we don't have any below 30. So that's it, fellow traders. Remember, it's not what you trade, it's how you trade it. So get out there and drain the banks like a rat. Don't be a Yale student.